William Quigley. William, of course, has invested in tons of companies, super impressive guy. And William, last week, people went nuts watching him because he had some outlook on different things. He's been dead on. William, are you around? Can we bring William up?
I'm here.
Hey, William, it's good to have you. And I like how symmetrical you are right between your two lamps. Good job on that.
I am deep in the bunker right now.
You're deep in the bunker. Okay, I know you don't always agree with Bill, but tell me why you think he's, do you think he's on the right path, or do you think he's all washed up on what he's saying?
I think most investors, and I have to fight this feeling myself, we have, as everybody knows, recency biases. We emphasize what just happened, not what's going to happen. I'm not 100 years old, but been in the market for maybe 30 years. And it is almost always the case that in times of maximum fear, maximum worry, that is the ideal entry point. So now Bill Ackman is, I would say, we have a phrase in the markets. It's called talking your book. If you've ever heard the phrase, talking your book means you're saying things, but you're saying it in order to help your existing portfolio. So he's correct that in the next 6 months, well, if Hilton has no customers, then it's going to lose money. But it is, I think, silly to say that all of our behaviors are going to change and no one's going to ever go into a hotel again. Now, it could be the case that if they don't have a rainy day fund, they will go out of business. Okay, that's for sure. We look at the airlines and all the other businesses that are probably going to either go out of business or be seriously hurt because they had no access to capital. But I think Hilton has access to capital. So I'm much less dour than he is.
So let's do this. William Quigley is joining us. I know many of you had questions from last week. If you can, go inside the chat, put your question in there. William has been from the venture capital side, startup side. He's owned dozens and dozens of businesses. He's been on boards of publicly traded companies. He's worked for Disney. He's one of the biggest crypto people on the planet. William has seen the ups and downs, and he makes most billionaires look like ants.
Oh, that's a nice exaggeration.
I don't know. But hey, William, real quick.
Yeah, I have a few things I want to do. I have a few things I want to do today, Ken. So ask me your questions, and I want to show the team some info.
Let's see some info.
Okay. So one of the things I'd like all you guys to think about while we're doing this, in fact, I had a great conversation with Nolan Bushnell, a lot of you guys know, about, hey, we've all seen when things are really bad, things generally turn around, if for no other reason than pure boredom. We ultimately want to change what we're doing now. But when you're dealing with something unprecedented, I think the best thing to try to do is find a proxy as close as possible for what you're seeing now and say, well, let me look at that company or that economy and see how they dealt with a challenge. And maybe we can model some of those assumptions into the future for us. So this is unprecedented, I'll grant you that, what we're going through right now. I mean, I certainly don't know of any recent experience for a country that has literally told people to stop working. In some ways, which is a bit scary, telling people contract law, rule of law won't be imposed. And I'm sure Ken has shared with you a lot of different scenes of people in San Francisco just going into stores and taking stuff and whatnot. Right now we have people who are renters being told you can't be evicted. I understand that, but I also understand that, yeah, but you've got property owners who have mortgages. So, you know, what gives? Well, when it comes to our economy, I initially was struggling with this as well. Like, this is not 9/11 because the vast majority of the economy was working. This is definitely not 2008 because other than the financial sector and housing, A lot of other businesses seem to do okay. So this is across the board, of course, across the world. So one proxy, I guess I would say, the only one I could think of was, what's an example where an economy was destroyed? Maybe an economy where a giant force came in and bombed it. It knocked out its infrastructure. It wiped out its electrical grid. It wiped out its transportation grid, its finance grid. It destroyed its very government. Now, there is such an example. It's called Iraq in 2003. The country not only did the things I just told you, literally bombed to pieces, but that was the good news, because 6 months later, they had a civil war. So you got to imagine a lot of people in Iraq were afraid to be bombed, and so were hiding and not going outside. It's not a bad proxy for what maybe is going on right now. So I'd like to give you guys just one snapshot of some data from the World Bank and the CIA. Let me share it with you right now. Can I do screen share, Ken?
Yeah.
Okay. All righty. Let's get this. Yeah.
Do you have access to screen share?
Oh,
Will, do we have
I am a Zoom dude.
There you
Okay. Hopefully you guys can see that. If you can't zoom in a little. Now, 2003, I don't see, but GDP, 36 billion, right? And then they've got the adjusted for inflation. Pick either one you want. But I want you to notice something. It was really low when it got bombed into the Stone Age. And we don't have to go through every number, but it goes up a lot. In fact, every single year for many years, it's increasing. So by the way, you got to love this too, 54% snapback. Now, it did get super hard hit, but remember one thing about finance and the valuation of businesses. They are never valued based on how they did years ago. They're valued based on the expectations of the future. So you would have been very short Iraq in 2003, and rightly so, maybe 2004. But you know what? People must live. They're gonna eventually start working again. And you know, the United States has not had its electrical grid, its transportation grid, its finance grid, and its government destroyed. We haven't had a civil war. In fact, people are cooperating. So while I think this is horrible, I do believe that everybody's going to get back to work. So I don't know what the right time to enter the market is, but I do know there is going to be a time where when you enter, it does magnificently better. So just everybody should keep that in mind, and we should hopefully through Metal talk about when maybe those entry points are. So that's one thing I wanted to share with you guys today. Another thing I wanted to share, this is crypto. Or first, this is the S&P 500. So you guys are familiar with something called the PE ratio. It's a statistic for valuing stocks based on how much they earn. That's a little weird, that big jump right there that I'm putting my cursor on, because the stocks had no earnings, or a lot of them didn't because of the financial crisis. And the stocks were very, very low, and then earnings jumped back. And because they were very low, suddenly they jumped up. But you see this 17.34, that's where we are right now. Historically, this is where we are. The median, so that's the better version, I think, than the average, is 14.82. So you could kind of say here, guys, that stocks are still pretty well valued.
William, real quick. Someone just asked, Iraq was funded by the United States. Who's going to rescue the world when it shuts down?
I will tell you that. It's a magic box. And I'll tell you that in a second. Okay. It's way better than the U.S. government.
Okay.
At least from from a Iraqi standpoint. So this just to see, by the way, you saw this was the World War I, December 1917, 5.3. That's pretty damn bad. Obviously, the 123 here, that's simply because stocks were so low. Now think about that. Stocks were, Bank of America was a couple of bucks. Then it went up to what, a couple of $100. So that's a good sign, I think, of what we should be thinking about. When we think about these stocks getting beaten down, prices dropping, but once the economy returns, earnings going back up, this is a sign that essentially the snapback is going to be rapid and extreme. So I'm, by the way, if you ask me, that 17.34, it's still above the median of 14.82. I kind of feel like when it goes below that median, I'm going to feel much more comfortable because that historical average has a lot of weight to it. I won't jump into this one too much, but there's multiple ways to do PEs. This is one that smooths it out over 10 years. The value of that is you don't see all the noise, you see the really big events. What happened in the 20s and the 30s? Obviously the Great Depression. Go here to the big bubble. You see what that went up to? Pretty crazy, right? That would have been a sign, guys, way above the mean. So maybe get out. Right now, we're still, even on a 10-year average, we're still doing what? 30%, 35% above the median. So stocks are still pretty well valued. Now, one stock that's extremely well valued is this guy right here. That is our friend Zoom. You'll note the PE ratio is 1,450. So that's a little bit above the mean of 15. I think it might be overvalued, but who knows? 36 billion market cap. Microsoft probably would want to buy it if they could. Funny little anecdote, by the way. Somebody leaked a memo that someone at Microsoft had prepared about emerging threats to Microsoft, and Zoom was there, which is pretty crazy. But I understand why. Here's something that is pretty interesting that a lot of people don't realize. So what I'm showing you here is Bitcoin quarterly returns, all right, for about, I think this is about 26 quarters. So Q1, Q2, Q3, Q4 by year. I'll do the quick math for you. Half the quarters it's been negative, half the quarters it's been positive. Some interesting stats. There has been Q2, which you'll see here, is strangely enough a very, very good quarter. Now, I think it's kind of silly to actually bank on something like that, but it does look like Q1 always sucks and Q2 always gets better. So these are the sort of mental things that guys trading crypto sort of look at because they're worried other people are going to look at it as well. But it's basically pretty balanced. And by the way, just a week and a half ago, this 2020 number was up about 15%, and then crypto dropped. So Bitcoin dropped in the quarter 15%. How much have the stock markets dropped? A shit ton more. So I'm actually pretty happy how well crypto has held up. Something that is wildly misunderstood, and for all you guys, I'd say this is something that maybe 1% of crypto people even understand. There's this sentiment prior to the last 2 weeks that Bitcoin was uncorrelated to the S&P 500. So you could own Bitcoin and you wouldn't have to worry about changes in the S&P because it's uncorrelated, and people like to own a little bit of something that's uncorrelated to the rest of their portfolio. Well, that blue line is showing you the actual correlation. Now, what you'll see is it may not be zero, but it's like 10% or 5% correlated on average over one class of S&P, the 1-year SPX. it averages about 4%. So what this means is for a dollar increase or decrease in the S&P 500, Bitcoin only moves 4 cents plus or 4 cents minus. It remains a pretty darn good uncorrelated asset. You will see right here in the last, couple of days, it moved in actually a good way. S&P dropped a bunch and crypto didn't drop as much. So this is now negatively correlated, meaning as S&P is going down, Bitcoin's going up. But this is about the strongest correlation of movement overall I've seen. But in this case, it's inverse. As S&P drops, Bitcoin's going up. I think that's pretty cool. Another one to consider is Bitcoin and gold. We're all told Bitcoin is digital gold. Guys, this looks like the S&P again. It's actually quite close to zero correlation, except for this little bump right here. So I would say to you over about 2 years, about 2 years of data, Bitcoin has done what I thought it would do. It's uncorrelated to every other asset. That's good for us.
Wow.
Something else you may have heard, and I'm almost sure you've ignored, and you shouldn't, because it's amazing. I think I talked about this last week. There is this crazy thing going on in the world right now, particularly with the United States, that no economist could ever have conceived of. And that is this. The economy has, according to Bill Ackman, it's going to zero, it's collapsed. We are now printing trillions. It'll probably be $10 trillion.
People, by the way, William, the recovery from 2008, how much did that cost?
$8 trillion.
8 trillion. Everyone needs to understand $8 trillion is what 2008's crash cost. This is going to be 10 to 12. Some people even gone up.
10 to 12.
Yeah.
But guys, let me say, it doesn't fucking matter. Because this is the crazy thing that's happening. So every, schoolboy with an economics textbook knows when you debase your currency, when you print a shit ton of money, you get punished 2 ways. First, if you want people to buy your currency, they tell you you have to increase your interest rates. So now you're paying shit tons of interest rates to borrow. And the other, of course, is your currency collapses compared to other currencies. So what's happened to the dollar? The dollar is going up so much. The Fed is getting freaked out. The value of the dollar is increasing versus the other world's currencies. You see it slightly decreasing to about flat with China, but a lot of the other world's currencies, it's going up in value. If it stayed at the current value, I would say, great, we're printing trillions. If it dropped by a few percent, I'd say, great. It's going up in value. You want to know how badly up in value the Fed is worrying it's going to go up? So much that we're back to something called swap lines. Now, those of you who are a little kind of geeky people back in 2009, you might have heard of this. The swap line, though, is really easy to understand. What the Federal Reserve is doing is it's going around to the other Federal Reserve banks of the world, and it's saying your currency is collapsing versus the dollar, which means your purchasing power to trade in dollars, and that is the reserve currency, is collapsing. So people are making money in your country with your currency, but they can't buy stuff out of the country because everybody trades in dollars and your currency now is worth half as much, which means your prices have doubled. So what the Fed has done, which I think is great, is it said, I'm going to go to all the central banks of the world and we're going to loan you guys dollars, but at the old exchange rate, not the current exchange rate, which means all of that massive increase in dollars and your thing collapsing, the Fed is saying, don't worry about it for now. And by the way, just the very act of doing that has caused those currencies to stop going down. So the US is acting very responsibly right now to make sure these rates, these currency exchange rates hold stable. Because let's also remember, if we have to sell products in the US to foreign buyers and their currency has collapsed and we only accept dollars, they're not buying any of our stuff. And as I said, the crazy thing is, at least for now, it's a free lunch because we're able to increase our country's debt by a massive amount. We're able to rescue the other currencies, and our currency is staying strong, and we're giving 0 to negative interest rates. I don't know how long this magic trick can happen, but I do know this. What I would be telling the president is keep frickin' airdropping money into the economy until our exchange rate does start to get hurt. But if you can keep printing money and the value of your currency versus other currencies goes up, why would you not keep doing it? So I think it's the responsible thing. And of course, by the way, there's another country, and that's China. Now they have a pegged rate anyway, 6.2 RMB to the dollar. Right now, that's looking pretty good for them.
Yeah.
I do have one fear, and that would be if China's economy recovers before us, which it might, if they are able to start generating internal GDP growth. They've been a big exporter, but they're now doing a lot of business and GDP growth internally. What if they were to unpeg the RMB to the dollar? And what if the RMB wasn't 6 to 1? What if it went to 3 to 1? And what if a lot of people said, hell, we're more comfortable with the recovery of China. Maybe we'll start wanting RMB, then our currency drops. I suspect they wouldn't do that because the opposite could also happen. It could go to 12 RMB to the dollar. Who knows? But in these antagonistic games that Trump and China are going through right now, that's a little bit of a worry to me that they threaten to unpeg.
Hey, real quick, William, I know that we talked about currencies, which is great, but how about this one thing that we have been seeing with MBS out of Saudi Arabia? Because I saw oil was one of those situations that brought the markets down a few weeks ago also. And we have to understand that to make a barrel of oil, Saudi Arabia, it's costing them about $6.50, almost $8 to make a barrel. Where Russia, it cost almost $20 to make a barrel.
Yeah.
And the United States, it's around $13 to $16 to make a barrel out of shale. So right now, oil is dropping, which in a lot of ways, the petrodollar was pegged to all of these things. That, of course, has diminished greatly. And because of that, that's been affecting the market greatly also. It's not just economies, it's energy.
Well, yeah, it's the two, as I think most people understood. We had this horrible coronavirus thing, which caused all economies to freeze. Had they not done that, and all that happened was there was an oil shock due to a flood of oil. As I think I might have mentioned last week, oil going up by a big amount doesn't hurt economies nearly as much as it dropping. There's so many countries that are reliant on the price of oil. So those two things are really horrible. We can't afford a third one, that's for sure.
Yeah. Which, by the way, people suggest that the third one could be a natural disaster. And
yeah, I have a different theory on what the third one could be, which I hope doesn't happen. Well, every country is massively stressed right now. Tensions are high. It's a last man standing philosophy. I hope the US is the leader here and says we got to rescue other countries. By the way, that's coming next. For all the shit we're doing in the US, because we can print money for free, we're going to have to rescue Europe.
And too much cash, does that equal inflation?
It used to. But we have. Did you see when we doubled the money supply in 2008? Did all of us learn about massive inflation? No, yeah. Inflation didn't happen.
This is not at all. You're right. It was on the opposite.
Macro economists are not looking too good right now.
Yeah.
But in a good way. I'll leave you with one last thing here. This is the fear index for crypto. By the way, if it hits 0, that means everybody's dead and hates crypto. So it's 9 right now. And that's, you know, that's pretty freaking low from a historical basis. Historically, as you can see, historically, we have been as high as June 26, we had a 95. And right now, it's pretty low. It's a 9, okay? But it was actually lower last year. It was I think it's actually a 5. Yeah, so historically, it's been as low as 5. I wouldn't worry too much. I would say this to you, though, about this. In April 2018, where is it? April, somewhere here. Yeah, right around here. It was 10 or 11, right?
Mm-hmm.
That was April 2018. About a month later, and by the way, at the time, crypto was pretty, not doing too bad, about 8,000. A month later, it had gone up 25%. And of course, that's why this went up here. Yeah. But in December 2018, I think right around here, December, we were at like about a 10, and it looked really bad. Crypto was trading at 3,500 BTC. 6 months later, we were trading at 13,000. That's right here.
Crazy.
So I've often seen when fear is max, like it's not absolute max, but we're in single digits, usually what follows is some nice price increases.
Last thing real quick, people are asking, was that a liquidation sale at Toys R Us where you got your lamps?
Those lamps may not look like they're real, but they have been outfitted.
Hey, William, I really appreciate you putting all this effort together. We want you on every week to give us an update what's going on. People want to find you, William, where do they go?
Well, right now it's William E. Quigley, at William E. Quigley on Twitter, but I'm not a big Twitter guy.
So why do you send us there? Just go
well,
to your—
because you said where you go, or you could go to my bunker.
No. You're on YouTube also. You have YouTube videos are out there.
Oh, all the YouTube videos. Yeah.
All right.
Can I send you a link to those? Because I do a YouTube series every week.
Let me have that. And also let me have all those links from the sites that you just had so we can put those inside the portal. Yeah.
And one thing all of you guys might want to, I almost forgot, you really might want to also consider getting. I recommend this one here. It's cheap and it's in some ways better than, better than currency. So
that's it.
That's it.
Thank you so much for enlightening us and giving us all this insight. I really do appreciate it. Ben. All right, so William there is helping us out to understand where markets are. Every week he's with us. And